In this presentation, I will be demonstrating how to create a profit and loss statement. On the right, you can see the information that I've been given about the company, and on the left, a template that I will be using to create the profit and loss statement. Before we begin, we always must put our title in. The first line is always the company name. The second line tells us what type of statement it is, so our profit and loss statement. And finally, this tells us about our date. Remember, for a profit and loss, it always needs to be in the format of for the, in this case it's a year, ending, and in this case it is the 31st of December 2013. So let's get started with our information. The first line of information we have tells us that in this year we had 2,080 orders in the year, giving us sales of £444,000. Okay, these are sales. This is money we've earned by doing business, and so this is going to be our revenue. We have revenue, and we are going to put our number in here. So that's that first one taken care of. Next, we purchased this much stock throughout the year, as well as there was £12,000 worth of stock inventory left at the end of the year. One thing I must note is that this statement that I'm doing is going to be the first year the business is in business. In this case, our opening stock will be 0 because we were not in business last year, and so we would have no stock left over. Next, we would have all the stock which we purchased, all the things that we purchased to sell to make money, which is exactly what we consider our cost of goods sold. Finally, we had our closing stock, or our stock left over, our inventory that is still left. We haven't sold it, and so the cost associated with it, the $12,000, is not a cost of sale that we would incur this year. It is a cost of sale for the sales for next year. So we always take our opening stock, we add to it our purchases, and we subtract from it our closing stock. Let Excel do the work for you. And that's that taken care of. Next, we have a few items such as our rent and our domestic rates, which we would consider to be our expenses or our overhead. These are not things that go directly into making the product that we're selling, and so we need to put them down here under expenses. So first we have rent, which is $6,500. However, to note, it says per quarter, not per year. A quarter consists of 3 months, or 1/4 of the year, and so we must multiply it by 4 to get the total cost for the year. Next, we have our rates. These are £1,800 over 11 installments. An installment is basically a payment. So what this is saying is throughout the year, we had to pay £1,800 11 times. So for the whole year, we need to multiply it by 11. Next, we employed 4 machine operators who were each paid £1,400 per month. So these are our wages. Okay. And to calculate these, we had 4 machine operators, we paid them £1,400 each, so we need to multiply it by that, and that's per month. So for the whole year, we need to multiply this by 12. Okay. In this case, this is considered an expense, not a cost of goods sold, because what these machine operators were doing was not creating the product we were selling. Next, we have our telephone bill. So again, it's another expense. So we can put in here telephone, and we're told that it is £60 per month, so times 12. And actually what we could do is lump our post in here with us. So, apologies. And add to that our post, which was 200 per month times 12. You don't need to do it all in one. You can separate it out. I've just decided to do it together. Okay. Next, we have our distribution costs. Okay, distribution costs is talking about how much it costs us to send our items to our customers. This is similar to shipping our products to our customers, and this is something that we consider to be a cost of goods sold. Okay, we must do this to be able to sell our items, so our distribution is actually going to go up here with our cost of goods sold. Okay, we've calculated that this is what it's cost us to buy the products, but we need to add to that the distribution. It says that it's £10 per order, and we were told, if we just bring back some of these, that there was 2,080 orders in total. So here we simply have to take our 2,080 orders and multiply it by £10 each. Okay. Now we have all the information we need to calculate our total cost of goods sold. So we're going to take our initial cost of goods sold and we're going to add to it our distribution. Okay. Next, we see that we did some advertising. Advertising, again, is an expense or an overhead because it's not something that directly contributes to making our product. It says that we put an ad in the local magazine that costs us £35 per week, so we need to multiply that by 52 weeks to get the year, as well as putting it in a trade magazine, which costs us £500 per quarter, and remember, per quarter means we have to times it by 4. That's our total advertising. Next, we have our lighting and heating bill. So remember, lighting and heating, again, are going to be things that we pay to do business, but that don't directly contribute to our cost of goods sold. It is £2,000 per quarter, so again we times it by 4. Next we have our insurance, which is £800 for the whole year, so that one's somewhat simple to include. Next it says that we've repaid £1,000 a month to our bank loan. Okay, this can be a little bit tricky. Remember, our bank loan is an amount of money that we owe. Things that we owe we call liabilities, and those go on our balance sheet, not our profit and loss. Our repayments, well, yes, it's money going out of the business. It is not an expense per se that we've paid money for. And so this item is actually not even going to appear on our profit and loss. We will save it for when we do our balance sheet. Okay. Next, it says that we have £105,000 worth of fixed assets. So again, fixed assets will go on our balance sheet, not our profit and loss. However, it says that we feel they should be depreciated at 10% per year. Depreciation is a very specific accounting term, and to be brief, it's talking about making an expense for how much we've used this asset. So what it's saying is, yes, last year we may have bought this asset for £105,000, but because we used it all year, it's not still worth that much. 10% of it is gone, and so that is an expense for the year. So we're going to add depreciation, and in here we're just going to take our $105,000 and multiply it by 10%, or 0.1. Next, it's talking about owing suppliers and customers. Again, this is something that goes on the balance sheet. Okay. And it says here that we have a certain amount in our bank Again, not something we have to worry about right now because that goes on our balance sheet. And finally, it says that we're not paying ourselves wages but paying dividends, and so those do not go on the profit and loss sheet either, and so we're not going to worry about those right now. So we have all of our expenses, and so we need to add them up. So we're going to use a function of sum and add up all of these items. Finally, to calculate our net profit, we are going to take, first we should do our gross profit. Remember, that is our revenue minus our COGS, or cost of goods sold. And then our net profit is our gross profit minus our total expenses, which in this case, and as you can see it has a double underline under it, is £96,160. So with the information that was provided to us, we can say that this company has made, in this year ending December 31st, 2013, this amount of money. This has been a brief introduction into how to create a profit and loss account with specific set of information. Hopefully you find this useful and you can use it to help you create your own.